It has, of course, been an incredibly volatile couple of weeks for tech stocks, but could the slide in the Nasdaq actually be presenting us with an opportunity when it comes to Apple's share price? Hello, I'm David Jones. I've been a technical analyst in financial markets for about 25 years, and this is our YouTube channel dedicated to US stocks. I thought we'd do an update on Apple. There are lots we could look at the moment because of the incredible volatility, the massive slide that we've seen across the board in stock markets. But I thought Apple was an interesting one because it's always so popular, and it is seen as something of a bellwether, but not surprisingly, its share price has been hit as well. So in this video, we'll jump on the chart, see what's been going on with Apple over the last few weeks. I'll come back, talk quickly about some of the factors that have driven it historically. We'll look at the big levels to watch, then we'll jump back onto the chart and look at things in a lot more detail. As usual, if you're watching this, if you can click on subscribe, support the channel, and we'll continue to push out regular content on US stocks all the way through 2020.
So here's the moves in Apple following really the corona crisis and the big market sell-offs we've seen over the last 3 or 4 weeks now. So the price has dropped from about 327, the highs mid-Feb. It has been as low as 255, but at the moment on Monday this week closed at 266. So it's still down about 18%. From those highs a little under a month ago. And it's a big fall, but I do wonder, is this actually an opportunity in the great scheme of things? I'll talk about this a bit more. We'll come back and look at it in a lot more detail.
So like everything else, big slides in Apple over the last few weeks, but pretty impressive bounce back, I suppose, over recent days, although that 300 area at the time of recording is still proving to be something of a problem. If we talk about the earnings from the end of January briefly, they beat expectations here, beat expectations in terms of earnings and in terms of revenue. All looked positive, everything was going well. Then, of course, we had the concerns about the coronavirus spreading and stocks really start to sell off. As a result of this and the impact it has on supply of iPhones, of course, and other products for Apple, the company has already said halfway through February that it wouldn't be meeting its revenue forecast for this quarter. So it's not surprisingly, that's put a bit of pressure on the price. On the upside, legendary investor Warren Buffett from Berkshire Hathaway or Berkshire Hathaway, depending on what side of the Atlantic you sit on, said he was a great admirer of Apple. His holding in Apple is the third largest his company has, and he said it's one of the best companies in the world. Praise indeed, but not too much of an impact on the share price just yet. Let's look at the big levels to watch, because I think there are some really key technical levels when it comes to Apple. So the all-time high so far, end of January, $328 a share. But more of an immediate hurdle, it's the highs after the gap down. We've seen a couple of attempts on this area, around about $304, $305 a share. That is proving to be something of a ceiling at the moment. On the downside, $256 a share, 3rd of December low. It's also, so far at least this year, proved to be the low during this sell-off. So any weakness back to those sort of mid-250s looks interesting. After that, we've got to go sort of quite a way back to the end of October, looking at 240 as the next level. But let's put some colour on these numbers. Let's jump onto the chart and take a look at things in a lot more detail.
So just to remind ourselves, this is the big picture view for the Apple share price. If you go back to 2011, it was trading, the highs were about $60 a share and recently touched $325, $330. So what we want to focus on is what's been going on really since the beginning of 2019. So let's just jump in and have a look at this in a bit more detail. So clearly we're seeing plenty of these tech stocks take a hit as the whole market comes under some pressure because of the worries that the coronavirus could have on the economy. We've seen big falls this week, fueled by that the price of oil dropping by 1/3. So more panic. We are seeing ahead of the market open on Tuesday, a bit of stability coming back in, but just to focus on Apple and what's been going on since the beginning of last year. Beginning of last year, the share price was down around 140, so it had more than doubled coming into those Feb highs, and we are seeing what is a particularly vicious sell-off, but it's just mirroring what's going on across all these markets. And I think if we do see calm come back, this could end up being a buying opportunity. We've got this pretty solid trend that's been in place now for Apple, going back to those 2019 lows. That's coming in around about $225 a share. I think what's interesting, the sell-off so far has stopped ahead of those December lows, which came in around 256, so ahead of 250 a share. Then we've got bigger support out at 240. So whilst I think in the short term we could see the price under more pressure, I think as long as these old lows, even back to October, hold, so around about 214, this whole 214 to 260 area, yes, it's a wide band, but it is where that trend is coming in. We've got the old highs from the summer of last year, July. They ended up being a problem. Then we've got that sell-off, very brief sell-off towards the end of October before the share price moved out to fresh all-time highs again. And then these more recent ones before the surge into the end of 2019. It's the most oversold the RSI has been. This is a 10-day RSI, so it's the most oversold it's been for more than 6 months now. We've got to go back to the summer or May, June of last year when the shares dipped below 180 to see it this oversold. So whilst in the short term it does remain under some pressure, it wouldn't surprise me, leaving the possibility of a market crash to one side if we don't see markets continue to fall off a cliff, to see some sort of stability at these levels, starts to build a base, and assuming we get some sort of normality coming back, the share price pushed back up above $300 a share. So for me, the first level to watch, roundabout, clearly the lows so far ahead of $250. Then after that, these lows coming in around about 237, 240. And while above here, I'd be expecting the trend to resume and the shares really to hook back up higher.
That's it for this update in Apple. So from me, David Jones, good luck with your investing and trading.